You ready? You got me running, got me running. Shake it, shake it, shake it, shake it. Raise your hands up. Raise them up.
Okay, welcome everybody. Welcome to the Forex Trading Asia Daily Currency Call. So this is the episode 279. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. So this currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Okay. So yesterday, Japan, the BOJ monetary policy decision was released yesterday. Also, there was a OPEC meeting. So today we have Kim Hong, currency analyst at LCMS Traders, to share with us his views on both the events. So Kim Hong, I'll pass the time to you.
All right, thank you, Junwei. Okay, so picking up from where we left off yesterday. So the Bank of Japan, as expected, they kept their monetary policy unchanged. Okay, they left their interest rate unchanged as negative 0.1% as well. However, okay, to the surprise of many, they actually revised the GDP for 2021 from 3.9% to 4.0%. Okay, so we might be thinking that, due to the recent spike in the number of COVID cases, they may actually revise downwards instead of upwards. Well, I think they seem to downplay the recent spike. However, okay, in the report, they actually state that the outlook provided is highly unclear and subject to change. Okay, and probably one of the most important point is that the projection, okay, is actually based on the assumption that the COVID impact will fade off gradually, which we know is not going to take place like anytime soon, right? So yeah, I would say just take the report with a pinch of salt. And for traders out there, keep your trades short if you are trading any yen-related pairs, okay? And for what it's worth, they actually started to provide forecasts for 2023 as well. So starting from this report, they actually include a GDP forecast and an inflation forecast for 2023. So I guess they are actually trying to take a longer perspective, like making their projections more long-term. Right, so that's the BOJ. Moving on to the OPEC. Okay, so yesterday the OPEC Plus, they actually held their monthly meeting. Okay, so during the meeting, they actually concluded to stick with the plan for a phased easing of oil production cut. So back in, if I'm not wrong, April 1st, okay, during the meeting, they actually decide to, they say that since the economy is picking up and oil prices are slowly rising, they would like to actually bring back oil production, okay, back to as close to the pre-pandemic level as possible. So they actually plan to ease oil production cut starting from May to July. And yesterday, they actually conclude that, we are just going to stick with our plan. So the targeted number of barrels per day of oil that they will be bringing back would be around 2.1 million barrels. Okay, so remember that this is actually a gradual kind of thing from May to July. It's not going to be like once it's May, then, we are going to increase production by 2.1 million barrels per day. Okay, it's going to be a gradual thing. Now, so what this means is that for oil traders out there, okay, you may have realized that oil prices have actually recovered back to pre-pandemic levels. Okay, for the WTI, we are seeing something like a $62, $63 per barrel level. So from now on, okay, with the latest decision made. Sorry, I was told that I was muted. Okay, so should I repeat everything? Okay, so yeah, just to make it fast. Okay, so during the meeting, the OPEC Plus meeting yesterday, they actually decided to stick with the plan of um, bringing back the oil production up by 2.1 million barrels per day from May to July. Okay, keep in mind that this is a gradual thing. It's not going to be like a once it comes May, then we're going to increase by 2.1 million barrels per day. Now, what this means is that since oil prices have actually recovered back to pre-pandemic levels, we may actually be seeing a stagnation in oil prices. Okay, previously, a couple months back, or actually early this year, we are actually seeing like a huge rise in oil prices, especially the WTI and the Brent. Okay, because Saudi Arabia is being the leader of the group. They actually decide to carry out volunteer cuts in oil production, which led to rises in oil prices. Okay, but now that they're actually bringing back oil production, yeah, prices may remain stagnated. Okay, so that's for the OPEC plus. Another thing is that we will be hearing from the FOMC, okay, the US Federal Reserve, tomorrow at 0200 Singapore time. Okay, so okay, for this meeting, I feel that it may be a little bit of an uneventful kind of event because, first of all, as many of us have already know that they are going to keep rates unchanged and their monetary policy unchanged. Okay. However, pay attention to the press conference when Joe. Wait, am I muted? Okay, no. So yeah, pay attention to the rate statement and the press conference that will be held because, okay, if you remember that the Bank of Canada has recently eased quantitative easing. Okay, so there are rumors out there that say that we are all looking at whether the Fed will follow suit with the Canadian central bank. So yeah, pay attention to what they have to say in terms of the cutting back on quantitative easing. Another reason why this time around the meeting is going to be uneventful is that, okay, the meeting in June, they will be releasing the economic projections. So I would say the June meeting would be something of a more, would be of higher importance as compared to right now. So any potential changes to quantitative easing that the Fed will be carrying out may not be announced this time around, okay, because they do not have the economic projection materials yet. So if anything, they may actually push the announcement back to the June's meeting. Okay, so that's all I have for you guys today. Thank you.
Thank you so much, Kim Hong. A very comprehensive breakdown on that three events. Okay, let's now have Scott here, Scott Andrews from Forex Briefcase Australia, to share his outlook on the dollar index. Scott.
All right, thank you very much, and appreciate the analysis from Jim Hong as well, guys. So, look, like really mentioned just before as well with the FOMC, most analysts on the street are predicting uneventful stuff. I did write an article on Forex Trading Asia just before at about 10:30 GMT plus 8 time, Singapore time, just about preparing your what-if scenarios just in case for people that like to trade the contrarian view. There is some, I guess, Jerome Powell language that was unexpected, but really honestly, what people need to pay attention to here is wages growth. And that's really, like in Australia, it's very lacking. I mean, jobs are being created, but it's a lot of part-time stuff. It's nothing really significant. So honestly, I would say lean towards it's uneventful. But what's happening is there's a lot of earnings coming out of the US in equity markets. So right now, the US dollar is very held in place. And I'll just bring up the chart here now too. And I'll just show you really the price action communicates to us what's going on. And it's really being squeezed in together with the price action. 91 is just being tested now. Now, I wrote yesterday about, a break and a test of, 91.50 if it ran up. It really hasn't. And we're just seeing things consolidate. We're waiting on that meeting. For us here in this time zone, it's very early tomorrow morning at 2 a.m. So, get your coffee ready. But really, we're just waiting on a catalyst here to push things. But to be fair, uneventful is probably the way that we'll see things. And then, most likely we're going to see the US dollar, creep lower as well. In regards to particular trade ideas, you're just going to have to wait for the news to be digested, just in case. It only takes a few, even a sentence to really, push price. So if you're in a trade, you're very vulnerable, especially just after the news is released, where the algorithms are deployed, and you can get a whipsaw either way. So your stop is taken out. It makes it frustrating, and you could be correct, but you've just got to be patient, wait for the news to come out, and then a trade idea is really present. Those are my thoughts on the situation.
All right, thank you so much for that, Scott, on the dollar index. So right now, let's jump into the currency in focus today, which is the pound. So today we are with Jindao Tai, founder of LCMS Traders, a multi-million-dollar trader trading an account with more than $14 million on a daily basis. So yeah, Jin, pass the time to you now for the currency in focus today.
All right, good morning. Currency in focus, the pound dollar. Let's start looking at it. The main thing on the pound dollar, I'm going to do this a little bit differently again, is as we look into the Forex Trading Asia.com economic calendar here, just that quickest scroll through. We are on Wednesday today. Looking at it, there is no pound news coming out today. Right, we got some euro. We got Lagarde speaking later tonight, but that's an online talk about security, so probably not going to move prices too much for the eurozone. On Thursday morning, as Kim Hong was talking, we have the FOMC statements, rate decision, and press conference. Pay a lot of attention to the press conference. But that's the US dollar. Anything directly going to impact the pound dollar? Not too much. As we're scrolling through all the news, not too much news going to push the pound dollar either significantly higher or lower. So the focus comes back to the US dollar in this case. But as we consider both, the pound dollar and the US dollar, I want you to cast your mind back to what happened last week. Last week we had an intensive pound news week where, last week we saw employment numbers come out, not fantastic, but still rather good. We saw unemployment dropping, we saw claimant counts dropping, we saw employment change improving. We also saw CPI numbers, despite not hitting the expected at some levels. We saw an improvement on the year-on-year CPI for the pound. We saw on a month-on-month hitting the expected. And also I think as I scroll through last week, we saw, that's it. Okay, we saw some very good retail sales number coming from the UK as well. So not only do you have to pay attention to what could happen, what could push prices, have the habit of checking what's the underlying reason behind the possible movements coming up. So looking at the charts in this case, with the understanding that we're not going to see much pound news coming around, we know that there is some US dollar economic news and data being released through this week, and also that fundamentally strong pound economic data we've seen last week. We now look at the pound dollar on the H4 time frame, and we saw that front running of the news. We saw that very big push up towards 1.4, and then that rejection coming back down again. For this week, for the first couple of days of this week, the pound dollar has been trying to break above that 1.3911 level. It's tried once, it's tried twice, and it's failed 2 times so far. What I do anticipate at this point is because of that lack of pound news, we're possibly going to see this come back down towards the 1.3836 support level. It's staying within this range of 1.3836 and 1.3911. Without that lack, it's going to trade within this range. But as Kim Hong was sharing with you, looking at the US dollar, looking at the FOMC, possible or most likely a non-event, not talking about tapering, not doing much actions, not doing any actions, but they're possibly going to say we're going to do whatever's required to stimulate the economy. We're going to be ready to take action when it's required. So what I anticipate is, as a non-event, we might see the pound dollar come back down gradually now before going back up towards the 1.3911 resistance, and also possibly breaking up above that point to test again that 1.4 high point, a 1.4 resistance level. Very crucial point at 1.4. I think a fair value for the pound dollar would be to be trading around that 1.4 level. So we're more likely to see it gravitate upwards. Look for that buying opportunity for the pound dollar. What I would best suggest in terms of trading opportunities is not to trade within this range. It's in tight range and it's quite volatile within this tight range. I would say look for it to be very patient. Let it break above, let it break and close above that 1.3911 resistance. Look for a very tight stop, maybe 25 pip stop loss, a good 70 pip take profit level towards 1.4. So you're looking at buying opportunities above 1.3925. Above 1.3925, 25 pip stop loss, 70 pip take profit level, way above that 1:2, almost a 1:3 risk reward ratio towards the upside. As we look at the pound dollar, referring back to the euro pound, based on what we were talking about the euro dollar yesterday as well, saying that it was likely to come down, test and bounce back up. For the euro pound right now, it looks like we're going to see very good upside. As the pound dollar comes down, we could anticipate the euro pound to be pushing higher. As we see the euro dollar already retracing, looking for that bounce, we could again anticipate for the euro pound to push higher again. So in this case, with that trend upwards, with that move, on the general move upwards, look for the euro pound to break above that 8717 resistance or interim level. I would even let's be a little bit safer and say the 8720 resistance level. You're looking at a very tight stop loss, 30 pip stop loss. Again, let's go 8720, 30 pip stop loss for a good 60 pip take profit level. You're looking at a 1:2 risk reward ratio for the euro pound towards that upside of 8797. So this will play out if we do see the pound dollar track lower and also the euro pound bouncing off the support to head higher. So, sometimes when you're trading, you don't just look into what the news is coming up or what news could be coming up to push prices. Look into the previous economic data, look into the fundamentals, the basis of where prices should be heading. So we're seeing very good news on the pound dollar previously. So it has been trading in a range. Look for that breakout, look for that potential upside on the pound dollar in the medium to longer term.
Okay, thank you so much for that, Jin. I do have a question from a private message about the FOMC, but I will leave that for later. Meanwhile, okay, so just another important thing here, the trade the information here shared by Jin, by Scott, and by Kim Hong here is not a trade recommendation. It is just the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. So, okay, before I ask the question about the FOMC from one of the reader here, I'm going to pass the time right now to Jonathan. So Jonathan is the partner at Forex Briefcase. So if you're looking to diversify your investment, or if you're not doing trading pretty well, or if you realize that, hey, trading is not really for me, but you still want to benefit from the FX market, profiting from the FX market, do listen to what Jonathan has to say, because Forex Briefcase provides that totally hands-free approach to earn money from the FX market. Yeah, so Jonathan, pass the time to you right now.
Okay, thank you, Chinwei, and the rest of the panel for your analysis and introduction. Let me just bring my screen up. Okay, so Chinwei has given quite a nice introduction about what we do at Forex Briefcase. So we are actually a Forex managed account service that we operate globally over 12 countries and counting. Currently, we have over 800 clients around the world, okay, and we are based in many of the major countries out there. So what does this Forex managed account mean? Like Chinwei mentioned, even if you have no knowledge at all about FX, okay, or you are picking up the ropes on how to trade, or if you have been it for some time and realize that you're not finding much success with your own trading, maybe due to some emotional challenges, okay, as long as you're a client or an investor aboard our platform, you could be making money, or rather our team of traders will be trading the account for you without you having to put in any action. Okay, so let me just bring up some highlights of this. We have been operating for already 32 months, and that brings our total ROI to date at 94%. Okay, we had a fantastic year in 2019 with 47.41%, and that actually brings the average returns to about 3% a month. Okay, so despite having a fantastic year in 2019, based on a total ROI of 94%, you can roughly work out that we have enjoyed a return of 20 or 30% on the other years, which I believe is a very decent ROI annually. Okay, and how is that achieved? Not only the number is good, it is based on an average of about, you see there 3% a month, and is with a slow capital growth, gradual and consistent growth over time. Okay, I'm just going to bring up the chart of our performance thus far. Okay, you can see the graph, very nice, gentle, consistent straight line there. If you look at the numbers below, you see that we do have very consistent numbers over this period. Okay, and you must be concerned about downside, not much to worry about there. Our maximum drawdown so far is a negative 2.24%. So as much as we have that average number and some months better numbers for you, the downside is relatively reasonable. Okay, and throughout these 32 months, we had only 4 losing months. Okay, which you can see that definitely the upside is more well managed and the downside is kept at the minimum. Okay, contrary to most challenges that people face trading FX. This year alone, okay, why you should get started. This year alone we are coming to the end of April. We are already at 11.13%. If you look at the background that I have on my screen as Scott's background, 11.13% already this year. Okay, and based on the average numbers, there is no right time to start. The best time to start is now. Okay, you can start, let our team start making the money for you right away. So what's next? I'm sure Chinwei will be putting the links on how you can get aboard in the chat. Okay, but this is totally, you have the account, a secure account in your own name. You do not pass us the funds. We work with a secure brokerage. There will be an agreement signed between all parties, and best of all, once you respond to the link in the chat, you can even get started and set up within the same day. Okay, probably it's just gonna take a few hours if you have the time to do the admin work. So with that, click on the link. Look forward to having you on board, and let's enjoy this investment journey together. Thank you very much.
Okay, thank you, Jonathan, for that. Yeah, so I've pasted up the link in the chat. If you guys have any questions, you can reach out via the link and put in your details in the form. Jonathan here will reach out to you and get your questions answered. Okay, so back to the question that one of the participants asked me about FOMC. So, Jin, yeah, there's this FOMC statement, and then there's the actual interest rate, and then there's the FOMC press conference. So, basically, the question here is basically what's the difference between the press conference and the FOMC statement? Which is more important? Which one should they be looking out for? I think this is very beneficial to most of the new traders here.
All right. So what happens is they will have the rate decision being released. I'll show you the news as it gets released. Hang on, let me just find it. Not my Facebook channel. That's my new art, by the way, just sharing with you guys. Hang on, my screen just went blank. Wait, give me a second. Something's happening. I'm facing a bit of a technical issue. Okay, so there will be a interest rate decision. There will be a rate statement. What happens is when they release the rate decision, and in this case, we expect it to be no change. We expect to see the rate statement explaining the reasons behind why or how they have come to that decision of not increasing rates, or in any case, increasing rates. The press conference comes around when the media gets to ask questions to the FOMC, especially to the chair, about what led to that decision, not just a statement, but what led to that decision of changing rates or not, and also whether there's going to be a future rate change. They can ask questions about what could be looking forward into the future, and also maybe even go off onto tangents, not just about rates, not just about QE. They could be asking whether COVID situations could impact the market, and how is the FOMC going to adjust their plans and actions towards things that could happen in the market based on the COVID situation. So all that put together, that's where the press conference comes around. And you usually see more volatility, you usually see more movements during the press conference. So which ones to pay attention to? What I would do is look at the interest rate decision, read the statement, that gives you the basis, and then look at the charts, see what's happening, build that basis, and then wait for the press conference at 2:30, trade that volatility instead. But all in all, if you're going to be trading the FOMC statement, decision, and press conference, make sure you're a bit more familiar with how to trade a news, because with all that volatility, a lot of times people end up taking a lot more risk than they should. They enter trades more riskier than they should, or they take on gambles because it's at 2 a.m. They just want to enter a trade and make some money. So be very careful with it, but take advantage of those situations as it comes along.
Okay, thank you so much, Jin, for the comprehensive explanation. So yeah, that's the end of the session today. We will see you guys tomorrow again for the yen and gold analysis. Thank you so much and goodbye.